Deepak Sogani is joining us, the CFO. Thanks for joining us, Deepak. What does the recast plan entail? Let's talk about the restructuring. Share with us a few more details.
Thank you. I'd just like to kind of share the management focus on our Australian business. As a part of our conscious strategy, we have beefed up the management team in our Australian business quite significantly. We've also brought down the cash burn rate in our Australian business and are focusing on obtaining the license for our Russellville mine, which should come shortly, post which we should be able to start production in Australia with about 1 to 2 million ton per annum of coking coal production without any additional capex. So that's also a significant positive, and we look forward to that. Thirdly, we with this restructuring that you just discussed, we have been able to get the Supreme Court of New South Wales approval for the restructuring of our debt in Australia. And post the restructuring, we will be able to recalibrate our capital structure in line with the underlying cash flows. So there are two major outcomes that we will get through this restructuring. One, post restructuring, we will be able to see a bit of moratorium that we will get for our Australian debt. Secondly, some of our assets there which are monetizable, we have some land assets and some other assets that we can monetize. As a part of the restructuring scheme, or as an integral part of the restructuring scheme, we've been able to get the permission as a part of the scheme to be able to monetize these as and when we can, and with the proceeds of such monetization we will be able to further reduce the debt in our Australian business. So net post this restructuring, and once the Russellville mine is in operation, we are hoping that the capital structure in Australia will be able to be sustained by the local operating cash flows.
Okay, so now your Australian ops have a total external debt of about $380 million. So what's the amount that will go under restructuring?
So the entire $370 million of debt in Australia has been now approved for restructuring.
And your Mauritius entity, which is the holdco for the Aussie operations, has a bullet payment of about 153 million due before March. Will that repayment be made?
Yeah, absolutely.
Okay.
Absolutely. Our business is doing extremely well in India, and in our overseas businesses also we are EBITDA positive in all our businesses. We have clear plans to be able to take care of the $153 million debt repayment that is scheduled on the 31st of March. As a plan A, we are launching an international bond in our Mauritian entity. We should be able to go to the roads for that bond probably by early March and Feb, and the preparations for that bond is complete.
If I compare a domestic business versus an international business, domestic business is good, international business is okay. What is the long-term plan to stay committed to the international business? I mean, if you get a good buyer, would you say, look, I'm going to come back to India, focus there?
So our primary focus is obviously India. India is a growing economy. There is a lot of steel demand also in the country. While having said that India, our business is improving quite a bit, on the international side also our businesses are doing quite well. Our Shadid business, which is a 2.4 MTPA steel business, is doing quite well, generates almost $200 million of EBITDA every year. With increased focus in our African business, Mozambique business is improving quite significantly. Hopefully that will also do north of $50 million EBITDA now. Our South African business is doing also positive EBITDA. The only business that was not doing as well from an international point of view was Australia. And post this restructuring, from a management point of view, we are quite confident that we have reset the Australian business to a new trajectory with a improved capital structure, and also with near-term hopes for operational cash flows being generated from the business.
what's happening to steel prices? There was a steel price.
I hope that
hike
answers the question.
I've got the sense. Thank you very much. What's happening to steel prices? October hike, December hike, January hike. Is a hike coming in Feb and beyond that?
Yeah, so on the Indian steel side, obviously, as you're aware, the industry is operating at almost 85% capacity utilization. There's been significant demand pickup in both the months of December and January. Obviously, we saw a bit of lesser demand in the earlier part of the year, but December and January, the demand pickup has been very strong. We are primarily a longs oriented company, and we see a lot of demand coming in from the infrastructure side based on the various initiatives that the government has announced. So that's one side on the demand side. On the pricing side, in December, January, February, we've seen a continuous increase in the prices. In January, we increased the prices by almost 2,000 rupees per ton. And again, in February, we've been able to kind of increase the prices by almost about 1,000 rupees per ton as well. So we've seen continuous price hike for about 3,000 to 3,500 in the last 2-3 months.
Are your coal mining issues all sorted? Because news for JSPL has been good and bad. One side you got relief on what will happen to Sharda mines, but on the other side, the clear coal auctions which you desperately want in central India, they have not come to you. So since your stock has gone up from levels of 100 rupees to 200 rupees, the curiosity is that what is the next big trigger for JSPL?
See, fundamentally, from a company point of view, we are on an extremely solid footing. We are at an inflection point. After our Angul plant restarted about a year and a half back, slowly but steadily our volumes have gone up. In this year, we are likely to do around 6.5 million ton of volume versus about 5.2 million ton last year. And the way we will exit this year, we see a trajectory to increase our volumes further by almost 25% in the coming year. So the key story for us is one of significant volume expansion on account of our Angul plant ramp up. So that's the key driver for us. The second key driver for us has been our rich product mix, in particular our inroads into the railway segment, where in the last 12 months we've been able to kind of increase our order book and we've become a reliable supplier in addition to sale in that particular category. Our value added plates which come out of Angul, again we have the best in class plate mill in Angul. So I think some of the value added products that are also there in our portfolio are helping us increase the realization. So our story is primarily hinged on these two pillars, and on the back of these our EBITDA generations have been increasing quite steadily. This year, for example, last year we did 6,000 crore EBITDA, which gave us a free cash flow of almost $300 million from our Indian operation. Next year, when our volume expands, we should be able to see free cash flow of almost $600 to $650 million from our Indian business. So that's the cornerstone of our story. In addition, our power business is doing well. Very recently, we bagged 420 megawatt of additional PPAs in that business. We see the power business also to be at an inflection point. It is the most cost effective business that we have in the power side, both from a capital cost point of view as well as from OPEX point of view. And we see in the next 12 to 18 months that business also to turn around and do significantly better. So I think these are the stories because of which we are kind of seeing the interest in the stock markets in our stock. The next big trigger obviously is to see how the volume ramp up plays out in the next year, and it's important to see how our CGP DRI, which we have recommissioned in January and is already now performing. I think exit run rate in terms of our monthly volume in March will give a clear signal in terms of how we will be able to ramp up in the next year.
Right. Thank you for joining us, Deepak. We'll leave it there. Good chatting with you this morning.